Hey guys, welcome back to another video. And today we're going to be doing a market update to see what happened with volumes. Last week, volumes kind of crashed. Is it the same this week? What's going on with rates? Is capacity actually leaving and pushing those rates up? Again, we're going to take a look at what's happening with authorities, English language proficiency, spot rates, diesel prices, and so on and so forth. Ready? Let's go. All right, all the charts are right here. And as always, we are starting off with the change in carrier population. What is the net change? How many carriers came in versus left week over week? As of last week, we lost another 54 carriers net. Now, if we take a look at how that happened, you can see that the total gained went down. That's the red line. The total lost also went down, as in there were less lost than last week. Net change is negative 54 carriers. What is happening with those English language proficiency inspections? So October is complete. As you can see, yes, it is lower than it was in September, both for the violations in blue and the out of service orders, but still higher than August, and the out of service orders are higher than July or June, of course. November, it's up to November 3rd, so we can't really tell what is going to happen this month. If we take a look at this chart, you can see that the amount of violations and out of service orders week over week went up. And if we take a look at the percentage, yeah, you can see that the percentage, it's actually at the highest point right now. 95.5% of violations for English language proficiency result in an out of service order. All right, let's take a look at what is happening with those diesel prices. Unfortunately, second week in a row, no good news here. Currently, diesel prices on average are at $3.70 per gallon. That's 2.2 cents higher than last week, 1.5 cents higher than last month, and 14.5 cents higher than last year. Let's take a look at the maps. This is the price at the pump. This is last week. Here is this week. So as you can see, yep, the map got darker. Now, the most expensive state is California, $5.13 per gallon, followed by Washington at $4.99 per gallon. It looks like Texas and Oklahoma, more specifically Texas, $3.21 per gallon is the cheapest. Now, if we remove IFTA and take a look at raw diesel prices, this is last week, this is this week. If I do this, you can see that it did get darker. So the most expensive is actually Washington in this case, $4.39 per gallon. And the reason it's more expensive than California is because California has a crazy IFTA tax. All right, let's take a look at what's happening with those spot rates. Now, this chart shows you what happened last week, right? This is not for this week. And here we go. Reefer rates are $2.44 on average, flatbeds $2.33, dry vans at $1.93. All right, let's take a look at an overview. This is not going to tell you which places are the best, but it is going to give you some information about what's going on in the market. For dry vans, the highest recorded rate per mile on average came from Delaware, $3.46. This is for this week. Lowest rate per mile, Oregon, $1.26. Highest volume, Texas. Lowest volume, Delaware. And then the most versatile state for dry vans was Texas. Reefers, the highest recorded average rate per mile was Arkansas, $3.80. Lowest was Rhode Island, 99 cents per mile. And yes, when I do these are truckloads, right? This is not less than truckloads. These are not partials. These are truckload rates. Texas has the highest volume, Rhode Island has the lowest, and Texas is the most versatile for reefers. For flatbeds, the highest recorded average rate per mile came from New Jersey, $4.88. The lowest came from Montana, $1.51. Alabama continues to have the highest volume and is the most versatile, as you can see, and Vermont has the lowest volume. Okay, let's take a look at those loads and trucks, starting with reefers. So in terms of loads, where are they at? Texas, Illinois, California, and Georgia really stand out. Actually, Pennsylvania as well. Those states really stand out when it comes to more volume for reefers. Trucks mostly go to Texas, California, Florida, Pennsylvania, Georgia, and Illinois. But let's take a look at the rate per mile map. And again, the way I make these is every single Monday or Tuesday, I log into my load board and I go through every single posted load, and then I average them out. This is how we get the rate per mile map. So as you can see, a lot of gray areas, a lot of loads that didn't have a rate posted from those areas. But we can see that Arkansas actually had the highest rate per mile for reefers on average. But if we take a look, you can see that it's not very versatile. There were loads going to the Plain States for $4.42 on average, or the South, $3.18. The most versatile was Texas, $2.24. The worst rates go to the Midwest, $1.80. The best rates go to the Plain States, $2.65. Usually it would be shorter runs like Texas to Texas. All right, let's take a look at an overview for reefers. This is going to help us understand what is the change and where the best places to stick to are. So as you can see, a lot of green here, both for volumes and for rates. Yeah, which is very, very nice to see. All right, so first of all, you will see the rate per mile last week compared to the rate per mile this week. Same with volume, load volume. So it looks like rates for reefers increased pretty much everywhere except for the Northeast. And in terms of load volume, it went up everywhere. I don't know what happened last week. I don't know what happened last week because last week the volumes were horrific. The volumes are still lower than they should be though. This is something that is being discussed in pretty much every article, that volumes are down in a ditch, but it's nice to see that they increased from last week. So in my opinion, the best place to stick to for reefers is the Midwest. The reason for this is because the load volume is the highest load volume. And number two, the rate per mile is the highest rate per mile. I mean, they're kind of the same for the Plain States and the Midwest, but nevertheless, the Midwest is the place to stick to. You'll get a better rate, more negotiating power from there. All right, now let's take a look at what is happening with those dry vans. So in terms of loads, most loads come out of Texas, California, Illinois, Ohio, Georgia. Trucks usually go to Texas, the majority of them, California, and Florida. And then we have Illinois, Ohio, Pennsylvania, and Georgia as well. In terms of the rate per mile map, it looks like Delaware was the highest paying, $3.46, but this is because I believe there was one load paying $3.46 to the Northeast. The most versatile was Texas, but it pays on average $1.84. It does pay $2.53 on average if you're going from Texas to Texas or to one of the other Plain States. All right, let's take a look at the overview. Again, most of it is green. Two places saw a decrease in the rate per mile. That was the Midwest and that was the Plain States. But volumes, they saw an increase across the board. When trying to figure out where the best area to stay in is, we have to take into consideration the load volume paired with the average rate per mile. And in this case, that would also be the Midwest. It usually is the Midwest for dry vans. Even though the rate per mile is not the highest, the volume kind of offsets it because remember, I am looking at the posted rate. I'm not looking at what you negotiate after you call on a load. So I would say the Midwest is your best bet. All right, now let's take a look at flatbeds. Loads mostly come out of the South or the Plain States, right? Texas, Alabama, Mississippi, Arkansas, so on and so forth. Although the Pacific Northwest also kind of heated up. In terms of trucks, yeah, most of them go to Texas, California, and Florida. Rate per mile map. New Jersey had a pretty high rate per mile, but this is again because there was one or two loads that averaged out to $4.88. They were both going to the Northeast east. Now, if we take a look at Alabama, which is the most versatile, the average rate per mile is $2.57, and the highest rates go to the south: Alabama, Florida, Georgia, Mississippi, Tennessee, and so on and so forth. But it also doesn't pay horrible even if you're going to the West Coast, $2.24 this week. All right, let's take a look, and we are going to see that weird, right? Because most of the rates, they actually went down on average week over week, but the load volume went up. The only two places where the average rate per mile went up was the Midwest and the South, but the volumes increased like crazy. And for flatbeds and open deck trailers, the southern states are the place to kind of stick to. This is where you have more negotiating power. This is where you have a bunch of choices of where to go. This is where you can get shorter runs, perhaps, for a normal gross and a higher rate per mile. So what are my observations from this week? There is no doubt that the rates did go up. There's no doubt that negotiating is a little bit easier, although it's not steep, right? It's not like you can negotiate an additional $500 on a load. It does happen, but it's very, very rare. But I do have to say that the trend of loads being posted for lower rates continues. And this is despite the fact that these loads are not getting sold on the load board. So brokers are definitely still trying to kind of balance this idea of being able to secure capacity while not losing their customer or not paying too much out of pocket. So it's a balancing game at this point. Now, this could partially be because of the holiday season. However, as I mentioned already, volumes are really, really low right now. This is something everyone talks about. Everyone who analyzes market data talks about the fact that volumes are low, not just on the spot market side, but on the contract side. And the weird part is that that data also shows that the rates are increasing, which is very strange in terms of data. It's like volumes are decreasing, the rate per mile is increasing, that means capacity is leaving. But yeah, we still have a lot of changes that might happen, so we will have to just be patient and see how all of this plays out. Let me know how your week was. Let me know if negotiations are easier. Let me know what you're seeing on the load board. Are loads still flying off the board, or do you see brokers struggling to sell their loads? Anyway, guys, thank you so much for joining and watching. Wishing you all a fantastic rest of your day. Stay safe, stay healthy, and keep learning. See you in the next video.